Looks like the community continues to mushroom. I think I hear someone in the house. That is Terry. How you doing, Terry? Wondering if you could hear me. Waiting to be able to hear you.
Hello?
Hi, Terry. How are you today?
Good. How are you?
Good. All right. Great audio. Sounds clean. I have to apologize. I didn't have time to read your bio. Everybody, this is Terry Kinder. If you want to follow Terry, you can follow him at tkinder. So since I didn't have a chance to really prepare for the interview by reading your bio, why don't we just go back in time, Terry, and tell us what it was like for you when you first got involved in trading, and if you had any influences or mentors. Just take us back to how it was for you in the beginning, which is usually the most dangerous stage, the early times of being a trader. I know personally I had my teeth kicked in a few times. Who do you blame for getting involved in the markets?
Oh gosh, that's a good question. You know, I'd say a lot of my interest just in trading and in gold and other things. A lot of it, I think, was just when the financial crisis hit. I've always been interested in politics. I actually studied political science in college.
Okay, which financial crisis? So in my mind, you know, after 07, 08, people forgot about 2000, 2001. So
right, I guess I'd be referring more to 2007 and 2008 of the more recent.
Were you like a lot of people who had a stock portfolio that stockbrokers said that if you were diversified you'd be okay, and then you found out that wasn't true, and then decided to take things into your own hands and become more self-directed? Or were you self-directed from the onset? Because many people wanted to learn about the markets after they knew who better to make decisions than me, and not just a salesman at Merrill Lynch who puts me into a fund.
Right. I'd say that's true, and I mean I've been interested in stocks as well for quite a while, and I guess I got started like a lot of people did, kind of like you're saying. I mean, just in investing in mutual funds and stocks and things like that. Probably got started back in the late 90s, so kind of saw like what you're talking about, the tech bubble and all that kind of stuff. So yeah, we've kind of seen a few go-arounds at least anyhow of everything going way up and then coming way back down again.
So I notice even on your Twitter handle, you're quite the Renaissance man. I have this expression that trading is what we do, it's not who we are. So maybe you could tell people you have other interests and other things that you're involved with in your life besides trading. Is that correct?
Yes, yeah. Gosh, kind of really widespread interest. I've always liked to read a lot. So I mean, I love to read about history and have always been interested in politics since I was young. I mean, probably 7, 8, 9 years old, was just always fascinated with the presidency and all that kind of stuff as well. And I don't know. I mean, I just love to read. Whether it's about business or whether it's about history or virtually anything. Yeah. My interests kind of range all over.
Okay. So I told the community before you arrived that you had very interesting technical work that, in fact, the kind of lines and work that you do, I'm really not that familiar with, but interesting variations on pitchforks, etc. In Hangout here, Terry, we can share charts by going to the upper left-hand corner. There's a green box with an arrow, and if you click on that, you'll be able to share your desktop, show us what you're looking at. You've been tweeting in my stream mainly about gold and the S&Ps and where we are historically and a couple of possible scenarios which are still undecided. You showed gold short-term failed at one of your bands recently, and you have a target in the dollar not that far from where we are, down around the 95 level. So okay, right now that's showing my chart in your box. So
let me let me pop over to
there we go. Okay.
a chart.
So we're looking at the gold here, and what do you call that? A fan? All those lines.
What they've got on this is Trading View. They've actually got a thing, pitch fan, and I couldn't tell you all of the all the technicalities that make it work, but essentially it's a combination of a pitchfork and a GAN fan. So it's kind of an interesting combination, and really why I use it is just because I think it really shows pretty well a lot of your resistance and support levels over a period of time. So that's kind of one of the reasons I like to use that.
Yeah, it's interesting you're showing the high from, I was in the business in the late 70s when Russia invaded Afghanistan, and gold, the print high, you have it at 873. I kind of remember 880. And before this recent run in gold, I thought there was a chance that we might pull back there if the dollar had another run. Now it looks like perhaps the gold has bottomed, and I really wasn't there for this, although mining shares were showing great relative strength before gold turned. Why are you starting back here showing us a chart from the high in 1980, which was a high that stood for over 25 years? It was a 20-year high before the bear market ended at the 200 level.
Okay. Well, one of the things I found interesting about this, I actually added some things to this chart yesterday, and had shared it over Twitter, I believe. One of the things I found interesting about this was, and I've been watching the gold price pretty closely for several years, is how much the gold right now resembles what the gold price did back in the 70s and then up to the 80s high. So I've done a few things on this. You've got the like you say, the whether it's 873 or 880, you've got the high in gold. And one of the things that I've been doing is I've been playing around with angles on charts as well. So I'll take sometimes a pivot high or a pivot low price, and I will draw a line, and I'll draw it at an angle. So in this particular case, you've got an angle drawn from the high, and it's a 65-degree angle. And one of the things that I see in it, it can be different for different different things. Maybe gold would be different. Maybe maybe the S&P would be different. But this just happened to work out to be a 65-degree angle that kind of captured a lot of the decline in the gold price. So I marked it on there, but what's interesting is if you come over to the current market and you've got the it says here it's 1920 and 80-cent high. The angle is really close. If you draw the 65-degree angle, it's not quite the same, but it captures a lot of your a lot of your decline in the gold price. And there's actually a lot more parallels. I just think it's really interesting that if you look at them side by side, and I can pull out and kind of give you a look at it. a lot of times I say it kind of looks like a little brother and a big brother. I mean, you've got
That's interesting.
there's a lot of
Okay, so
parallelism to me between the two. Not to say that they're going to wind up doing the same thing, but they do look really similar when you look at them for a while.
they do. They
And
do.
they
One's more, yeah, one has a larger magnitude because it
right,
came
and
from
they
a higher price level.
right exactly. And it's interesting too. They tend to hit on the same. At least so far, they're hitting kind of right at similar points on this pitch fan. Like if you look at excuse me, if you look at point A, this is the same part of the pitch fan on gold over here as where it bounced in the current gold market. So they're catching a
Okay.
bounce at roughly the same support levels now that they did back in the 80s. I guess this is 80, maybe around
Okay.
82,
So is your
83.
premise that we bounce from C up to D?
Excuse me, not necessarily. Why I've drawn D on there. Well, I think it's possible. I mean, I wouldn't say that I would
Or, and your
guarantee or
bearish
promise it, but
premise
I think
is,
it's possible. I think it's possible,
okay.
and it also kind of coincides with with some possible resistance points.
Yeah, 13, 1400.
Right, and that seems to be something that, as I've looked at it several different ways, that roughly 1300 level, yeah, seems to be coming up again and again as a resistance level
And if,
that
and then if we,
I think is going
and
to be
then if
challenging
we,
for gold to overcome.
yeah, and then if we get through this line that we recently held a candle ago, you project to the next fan is about 880. If we
Oh,
break
I'm sorry. Could
down
you say that again?
from this fan line, there's nothing till 880.
Oh, as far as support,
Yeah.
um, yeah, on this one, yeah, there's not really a whole lot down there. I mean, I think it could catch, and we could look at some other charts. I mean, it could catch at some point, but I have thought
Breaking up on me a little bit.
that 1980 high. I really think we are at some point in time, and I think that might be, that might be a couple years out yet. I mean, that might be, 2019. It might be all the way out to 2023. I mean, I think gold is gonna. I don't know that it's gonna go way up, but I think it could go down, and I think it might take it some time to go down. It may not be, real fast on the downside, but I think it's going to creep lower over time.
Okay, so you were breaking up a little on me. So
Oh,
are you
I'm
saying
sorry.
that?
Go ahead.
Are you saying? Go ahead. So I'm not clear. I'm not clear on your view. So
Okay, I'm sorry. Can you hear me better now?
yeah.
Okay.
Where do you think gold's going, Terry? I'll just break it down. We've rallied $150 off the recent low. What's your view on gold? That we're heading up towards D, or heading down, or sideways? Are you bullish, bearish, or strongly neutral?
Okay. All right. Well, I would say in the longer run, or at least out if you go out over maybe 3 years or possibly a little bit better, I think gold's going to go down. It certainly looks like right now we could get a little bit of a bounce, and I've got some other charts we could look at as well, but I don't know right now that we would get way past 1300 or maybe 1400. I've seen some interesting charts. I saw a guy that did some Elliott wave analysis, and he thought gold might bounce all the way up to 1600, and I don't know about that, but I mean it wasn't something I would discount. But I do think over the next several years, it's probably going to go down. And I think at a minimum, it's going to retest that 880 level, and it could end up going below it. But I think at some point it's got to.
So right now, there's nothing actionable for you in gold.
I think it's going to go.
You're breaking
longer term. Personally, I would just rather wait until I think it's closer to a bottom, and then, either buy the actual metal or do something else. But for me, I'm just kind of waiting for it to get down towards where I think a bottom's going to be.
Okay. Okay. So, we may have topped short term. You showed a shorter term chart with a band on Twitter that showed that that might have been it for now.
Right. I think it's possible. Let me go look and see. Let me try to find another chart, and I can kind of show you what I've been looking at.
Do you teach people how to trade, or you just trade your own account?
I've just been trading my own account. I haven't really done anything as far as training anyone goes.
And your livelihood is from trading?
Actually, kind of do a variety of things right now. I actually have one of the things I'm doing and I've done in the past too is I've actually got an e-commerce business. I actually do some things on Amazon. I sell some products through Amazon. You can actually buy products, and you can ship them, and Amazon will warehouse them for you. So I actually do some of that. I'm a little bit all over. I'm a little bit all over the place as far as what I do. I kind of split a few different ways right now. I'm just trying to find the chart. Let me see if I can find, well, here's one. This isn't the one I'm thinking about specifically, but I think it'll work.
Okay. Yeah, I think that's the chart I showed, and you had a band up there around 1200 on Twitter.
Right. So this is one view of gold. I've got one I'm going to try to find. I think it'd be a little bit better than this. But yeah, basically this is a regression channel, and you're going back to a little bit around the middle of 2013, and gold's really just kind of been it's a pretty wide range, but it's been in a declining channel, and it spent quite a bit of time the last 2015 into this year until recently. It's spent a lot of time right at the middle of that channel or a little bit below until just recently. So to me, as long as it's in that channel, it's not really, obviously, something shorter term or maybe medium term, a person could trade on it. But I don't really see anything to say that the long term trend down is broken. To me, it's just kind of more of the.
Looks like that would take 1250 to come out of there.
Yeah. Again, you kind of get in that 1200 to 1300 range where, yeah, you don't break out of this channel until about the mid 1200s.
Okay.
Let me see if I can find. I had one I liked a little bit better than that, but let me see if I can find it.
And you seem to be pretty bearish on equities with the charts that you were showing on Twitter. So maybe you want.
Well, that's not the one I wanted to show.
Okay.
Yeah, I have been, and
well, you could show that gold chart. You could show that gold chart. We only saw it a second.
Okay. Yeah. Let me go back to it. This is another one, and it's a little bit busy, but again, it's kind of been an idea I've been been playing around with. I've kind of been layering in some things on some charts to try to find some support and resistance. So you've got kind of a multitude of things on the chart. You've got some of these lines that have these Fibonacci looking numbers on them that what they're called is like a speed. It's a speed
line. Okay.
Yeah, like a speed line. So I've layered some different speed lines, and they're running from different points. You've got a set that's running from up here somewhere in the 1800s. I've got some, I think, that come back to the high. So I layered a couple of sets of those, and what I'm trying to do is to find more support and resistance points on the chart. And then I've also drawn in some support lines that are those angled lines that I've drawn back from different pivot highs and pivot lows. So like if you look at this blue line here, it's actually, well, I don't think that's quite the right point. I think that's supposed to be 101. That should be back, I believe, if we go back and look at it. That line
getting a big bounce in crude, getting a big rally in crude, getting a big bounce in crude. So the EIA must have been shown a drawdown or something. I'm bottom picking the crude. I know you were also showing crude charts, so.
Oh, okay.
Yeah.
Yeah, this one on gold, this actually goes back to 76 to the low, that blue line.
Wow, that's when I started in the business.
So
I think that's when they made it legal. They made it legal to own gold again in 1966, right? And it opened at 200 and promptly fell to 100.
Wow.
And that was the beginning of the bull market, 1976, 77 to 1980. Yeah,
and
I remember that.
Kind of the idea behind some of these different angles is it's basically growth, kind of natural growth patterns. It's sort of a shortcut is really what it is, to look at kind of natural progression of growth and decline in prices. So I thought that blue line was kind of interesting because you can see we just bumped up over it again. So I would consider that kind of, it's kind of a resistance, and you can see it's provided some support.
Maybe we pull back and get a right shoulder. Yeah. Here's a thought I have in mind, and I'm not sure the dollar has peaked yet. I mean, has bottomed yet. You know, maybe we go there deeper, but I was thinking that perhaps we still have one more rally in the dollar above par, and while that's happening, we get a wave 2 or B pullback in gold. Dollar makes a new high, gold makes a higher low. That's something I have in the back of my mind as a possible scenario. So then when the dollar finishes its wave to the upside, gold could be a great buy there, some type of fib retrace of this recent rally. So the dollar makes one more high, it's in 4, it makes a 5, and gold pulls back in 2 after the dollar peaks, and then heads up, 1 down in the dollar, 3 up in gold. What do you think?
Right. I mean, I think that's possible, and
Thanks for interviewing me.
I think.
Do you like the way I interview myself?
I'm sorry?
Do you like the way I interview myself?
Yeah, that's good. That's good. That's good.
I'm my best audience.
I was just going to say, I think this decline in the dollar is temporary. I mean, it looks like we're getting a little bit of a bounce today, but yeah, I think I think the dollar is going to keep keep running higher, and I think I think it could get higher than a lot of people think.
Well, I've heard targets as low as a 75, 85 cent euro. Are you in that camp, and do you have anything dollar or currency related you want to share with us?
Let me look. Yeah, I could. Let me find see what I got for the dollar. Let's look at the squares and see. Okay, it's kind of another way of looking at things. Let me get rid of something here.
Yeah, these look more like harmonic type patterns, right?
Right, and I think I had someone look at it the other day and ask me if it was Gann squares, and it's not exactly that either. Although I imagine it's probably got similarities to both, but it's basically taking and I don't remember exactly where I started out on this thing, but it's basically taking from like a pivot high to a pivot low, and making a square out of it, and then making a series of repeated squares out of that run from a low to a high or a high to a low, and then drawing these lines across it. So you've got different angles. So you've got maybe like a 45-degree angle here or something roughly like that. But kind of my purpose of showing that here is, if you look as the dollar is spiked up, it's basically still above a trend line. So it hasn't come down. I mean, it could come down to, I think on here it's roughly 94.18 and still be above that trend line. So the dollar could pull back pretty far before it breaks. But then when you look at this, if it stays above the trend, I mean, you're talking about getting up above 100, pretty substantially before you start to run into some other resistance lines.
Where, all the way up at 114?
Could be, and I've kind of thought personally that I wouldn't be surprised, and I couldn't really tell you a time frame off the top of my head, but I wouldn't be surprised if the dollar ends up, at 120 or above that at some point. I think it's going to go a lot higher than a lot of people think, and I know there's been a lot of talk of currency crashes and the dollar crashing, and I don't know. I mean, maybe at some point it does, but I don't. I kind of like some of the things that that Armstrong has said. I think that that Martin Armstrong said. I think a lot of other countries are going to have problems before we do, and I think that's going to push a lot of capital flows into the U.S., into the stock market, and I would suspect it push some money into the dollar and push the dollar higher.
Well, a perfect example of that is compared to Citi or Wells Fargo or even Bank of America. Deutsche Bank is back at 2008 crisis levels, even lower. So the epicenter this time is not the U.S., it's Europe and China. So I do believe, I've interviewed Marty a few times, that's behind the thesis of the cleanest shirt in a dirty neighborhood.
Right. I think there's a lot of truth to that.
Okay. So I think Martin Armstrong's still sanguine about the stock market until 2017 as well. And we've recently had significant support being tested at 1800. And what's your view on S&Ps? Perhaps we could wrap it with S&Ps and crude.
Okay, let me get in here and see the S&P. Yeah, I was going to say earlier, one of the things I had run across doing some reading, and I don't know if you ever saw the chart I did, or not, one of the things I ran across, my computer's being slow on me. One of the things I ran across was some charts talking about 102-year, roughly 102. It can be a little bit longer, a little bit shorter cycle in stock markets. Except it's not exactly a I guess it would almost kind of be a mirror cycle. The cycle was about 102 years, except it alternated. Like if 1914 was an up cycle, then you draw out 102 years and you got to roughly 2015, 2016, and that's a down cycle. And I actually had posted a chart that takes the stock market back then and it turns it upside down, and it kind of looks like what's going on now. I mean, it kind of looks like it rolls over just like what's what's going on right now. And I really think, I think we're in for a pretty good downturn. I think it's going to last a while.
Okay. Can you recall in your head what type of? Here we go. Oh, that's the gold again.
Let me look. I should be able to pull it up. Might take me just a second because it's it's somewhere different. But I mean, I really think, and I can't remember if it was this source or if it was somewhere else, but it was talking about bear markets and bull markets being essentially like five-year cycles. So like a bull would be like 2 years up. It's the opposite, a couple years down, a year up, and a couple years down. So I mean, by the looks of it,
we went up from 2009 till last year's high. That was 6 years.
Right, and that's a pretty long one. Yeah, that's a pretty long one. But if you look at some of the others, I think they fall a little bit more closely to the 2-1-2. I mean, obviously that's not like a a commandment or anything that it has to happen, but I mean, it is a pattern that has repeated quite a bit.
So do you have any downside targets in the S&P or Dow?
I don't know that I have one as such. Let me look real quick. I'm going to see if I can find this this chart. Okay. I think it's one of these. Okay. All right. So this is now this is up. Let me see. Oh, okay. This is right side up, I think, which is fine. I can show you this first. So this is basically the stock market. You've got the stock market here was closed because of World War I. So it's not a perfect chart to use, but
how long was the market closed during World War I?
Honestly, I don't know, but it was closed for several months. It was closed for a pretty good period of time. Actually, this is right, because if you'll notice, the scale's reversed. You got 50 down here, and you've got 120 here. So this is the upside down chart. Okay. This is the upside down chart of the market back then. And I probably could get the right side up one too. But this is if you turn the chart upside down, and I think it's really interesting. This part's a little bit irrelevant because basically you had a big decline, and then the market went went up pretty sharply when it got reopened. But the part I find interesting is that you got this kind of these two peaks here, and that these two peaks, I mean, I think that we say back in, oh, I don't know, you might be looking at, I think this peak here might be roughly around where things were, say, around the December, January time frame. So I mean, if you look at it in terms of years, I mean, you've got, oh, what is this? This is March 15 here, and then I don't know, in here you might be around December, but you're talking about a decline of, you know, almost a couple years. I mean, it sort of works out to that 2-1-5 model. This is might not be quite 2 years, but it's roughly 2 years, a year, and a couple years.
Okay.
So I think if you apply it to the current, you know, the current time period, I mean, you're looking at something from what we started roughly declining around, what was it, May 2015 or something like that.
Mm-hmm.
You'd be talking about a bottom somewhere maybe late.
Okay, Terry, we're going to have to wrap it. There's someone behind me,
Okay, sure.
program right behind me. Why don't we wrap it up with, you said you had a high degree of interest in politics. Who's going to be the president next November?
Oh boy, that's a good question. You know, I think there's a possibility that Trump could win. I really do. It's hard to say. I mean, it's hard to say because you know, if things start to consolidate and maybe some of those other candidates start to disappear, maybe, you know, maybe someone who can put together.
Here's my prediction that Jeb Bush will be nominated at a brokered convention, and they're going to steal the nomination away from Trump. So that's my note. I want to thank you, Terry, for coming here and sharing your work and your views with us. The best way for people to follow you is on Twitter at @tkinder. Is that correct?
Right. Yeah, they could definitely go there, and I've also got a website too. They could come over to. It's at chartanalysis.silverback, and it's spelled SILVRBACK.com.
Okay. So Terry, it's been a pleasure meeting you. Good hunting the rest of 2016, and perhaps we could get back together down the road and see how things are evolving.
All right, that'd be great. Thank you very much, Dale.